Part 1. Origins of Influence. The story begins not in a boardroom, nor in a glass tower overlooking a skyline. It begins with a question that threads through the rise and fall of nations, through wars, through revolutions, through the lives of millions. What does it mean to control money? Money is often described as a tool, a medium of exchange, a simple convenience. But across history, money has also been something else, a force, a lever that shifts power, ambition, and fate. In the United States, few institutions symbolize this force more than Bank of America. Today, it stands as one of the largest financial entities in the world, influencing economies, shaping industries, and handling the wealth of millions of people. But its rise was not inevitable. It was constructed, piece by piece, choice by choice, crisis by crisis. To understand the scale of its power now, we must travel back, not to Wall Street, but to the streets of 19th century San Francisco, a place of dust and gold, a frontier of risks, dreams, and desperation, and a young man who saw something others did not. The Immigrant Vision. The year is 1904. A 19-year-old Italian immigrant named Amadeo Pietro Giannini opens a small financial office called the Bank of Italy. He does not come from political power. He is not born into American wealth. He is the son of immigrants, people who understand what it means to start life from nothing. San Francisco at the time was booming. The gold rush had transformed the region. Its ports connected worlds. Mediterranean sailors, Chinese laborers, Mexican vaqueros, and Midwestern settlers all crossed paths here. But in this city of opportunity, the world of banking remained closed and exclusive. Banks served the wealthy, the established, the already successful. Giannini saw a different world. He saw laborers who needed loans to buy tools, farmers who needed funds to plant crops, families who needed somewhere safe to place their savings. He believed banking could be for everyone, not just the privileged few. And then, in April 1906, the city shook, the fire that changed everything. At 5:12 a.m. on April 18th, a fault beneath the earth ruptured with violent force. The San Francisco earthquake remains one of the most devastating natural disasters in U.S. history. The ground convulsed, buildings collapsed, and soon, fires spread uncontrollably, burning for days. Banks locked their vaults, fearing the heat would fuse metal and destroy money. Most financial institutions retreated, unable or unwilling to help a desperate public. But Giannini did something extraordinary. With his staff, he rescued his bank's assets, loading them onto a wagon covered with vegetables to avoid detection by looters, and moved his operations to a makeshift desk on the city's docks. There, with a simple card table and ledger, he began issuing loans on trust alone. No collateral, no paperwork, just a handshake. This was banking built not on fear, but on belief. The belief that people, given hope, rebuild. And they did. Giannini's gamble became the foundation of something enduring, a relationship between financial power and the life of a community. A relationship that would shape the identity of Bank of America for decades to come. Growth through the American century. In the early 20th century, the United States transformed rapidly. Railroads, steel industries, mechanized agriculture, and manufacturing reshaped life across the nation. Cities rose, populations shifted, cultures blended, and money flowed faster than ever before. Giannini expanded his bank across California and eventually across the country. In 1930, he merged Bank of Italy with another institution, officially renaming it Bank of America. The timing was remarkable, as the United States had entered the Great Depression. As financial systems collapsed and trust evaporated, Bank of America continued lending, not recklessly, but strategically. It financed infrastructure, small business development, farming operations, and community projects. It helped keep parts of California working while much of the nation faltered. And yet, This move also marked something new. Giannini was no longer simply a community banker. He was building a financial network, one capable of influencing entire regional economies. This was the first glimpse of what Bank of America would ultimately become, not just a bank, but a pillar of American capitalism. Financing Hollywood and the American imagination. To understand American culture is to understand its stories. And in the 1930s and 1940s, those stories emerged from a new cultural engine, Hollywood. But filmmaking was expensive. Studios were risky. Films often failed. Most banks refused to support the film industry. Giannini saw something others did not. Bank of America financed early Hollywood productions, including Walt Disney's Snow White and the Seven Dwarfs, a project so ambitious that even Disney's own team feared it would lead to financial collapse. Instead, Snow White became one of the most successful films of its time. It changed the future of cinema. Bank of America had not just financed a movie, it had invested in a national myth-making machine. It helped create the visual language of American identity, dreams on film, stories of hope, individuality, and aspiration. This is the quieter, more subtle power of financial systems. They influence what a society imagines is possible. World War II and the expansion of finance. By the 1940s, the world was at war. Nations mobilized their economies, industries, and labor forces for global conflict. Bank of America became deeply involved in war financing and post-war reconstruction, supporting factories, shipping companies, and agricultural networks that supplied troops and sustained civilian life. Its reach extended into nearly every layer of the American economic engine. After the war, the United States emerged as a global superpower. The American dollar became the world's reserve currency, and American finance, with Bank of America as a central player, began to shape global markets. This was the beginning of something profound. A U.S. bank was no longer just a national institution, it was now a global force. Yet, power on this scale comes with consequences. Influence invites scrutiny. Growth invites competition. Ambition invites risk. And risk in the financial world is never theoretical. The dawn of modern banking. By the late 20th century, new financial technologies emerged: credit cards, electronic transfers, automated systems. Money became faster, more fluid, more abstract. And Bank of America was once again at the forefront. In 1958, it introduced the Bank AmeriCard, the first successful consumer credit card. A revolutionary idea that changed how ordinary people lived, spent, and borrowed. This innovation eventually evolved into Visa, now one of the largest payment networks in the world. Bank of America had not just influenced spending habits, it had reshaped the architecture of everyday financial life. Where once money was physical, paper, coins, gold, it now existed in networks, systems, and digital records. And the more intangible money became, the more power belonged to those who managed the system itself. This shift laid the foundation for the modern global banking era. The era of deregulation, mergers, multinational finance, and corporate consolidation. And in this new world, Bank of America would rise again. But this time, the stakes were higher, because the world was becoming more interconnected, more dependent, more vulnerable. And the risks of financial power, the same power that once helped rebuild a burning city, could now affect entire nations. This is where the story deepens. This is where power becomes something more complex, more fragile, more dangerous. This is where Part 2 begins. Part 2. The rise of corporate power. The second half of the 20th century marked a turning point in global finance. The world was rebuilding, restructuring, and expanding. Technology accelerated, markets grew, borders opened, and in this new environment, Bank of America began a transformation that would change not only its size, but its identity, shifting from a community-rooted institution to a powerful corporate enterprise woven into the very structure of the American financial system. This phase of the story is not about foundation, it is about scale. It is about ambition that stretches across continents. It is about how influence evolves when it no longer answers to a neighborhood, but to the global marketplace. This is where the institution becomes something larger than its founder ever imagined, shifting from community to corporation. After World War II, America entered a prolonged era of economic expansion. Suburban neighborhoods spread like constellations across the landscape. Highways connected states. Consumer goods became symbols of aspiration, and corporations grew, bigger, stronger, more integrated into daily life. Bank of America was no exception. Under new leadership, the bank moved away from Giannini's personal, human-centered model and toward corporate-driven growth. Branches multiplied. Investment divisions expanded. Decision-making shifted from community needs to financial performance metrics. And yet, something critical remained: the public trust. The belief that a bank stood not only as a financial institution but as a partner in the American dream. This faith would be tested again and again in the decades to come. The credit revolution credit, once seen as a privilege, began to be marketed as a lifestyle. The Bank AmeriCard, which would become Visa, unlocked a new phase of consumer behavior. Purchases no longer needed to wait for savings. Households could borrow, spend, upgrade, remodel, travel, all with the swipe of a card. To many, this felt like liberation, the freedom to live now rather than later. But at its core, credit is a trade. You borrow time in exchange for future obligation. Millions of Americans were now learning to live inside that obligation. Some benefited, others would drown. This was the quiet beginning of a national shift, one where debt would become a defining feature of the American middle class. And Bank of America was one of the architects. Deregulation and the era of expansion. By the 1980s, the United States entered a new financial philosophy. Markets would thrive best, leaders argued, when government interference was minimal. Banking laws loosened. Glass-Steagall, the Depression-era law separating commercial banking from investment banking, came under pressure. Competition increased. Banks merged. And Bank of America grew, not just in scale, but in complexity. It acquired regional banks, expanding its footprint across the country. It moved into new financial sectors: corporate lending, global trade financing, securities, and eventually, investment banking. But with expansion came exposure. The more interconnected a financial institution becomes, the more vulnerable it is to economic turbulence, and the more damage it can inflict when things go wrong. And turbulence was coming. The mergers that built a giant. The 1990s and early 2000s were defined by consolidation. Banks fused into other banks, forming entities of unprecedented size. In 1998, Bank of America merged with NationsBank, creating the largest consumer banking company in the United States. This was not merely a business evolution, it was a tectonic shift. A bank once rooted in California was now a national force. Branches spread across every major city. Corporate clients spanned industries and continents. Everyday Americans saw the blue and white signage become a familiar symbol, sometimes comforting, sometimes imposing. For some, Bank of America was the bank of opportunity: mortgages, small business loans, credit, stability. For others, it was a reminder of something larger, a financial system that felt increasingly distant, complex, and powerful. A system that shaped lives, yet rarely explained itself. But even as the bank grew, unseen risks were accumulating beneath the surface. The housing market was changing. Investment instruments were evolving. Debt was being repackaged, resold, multiplied, and embedded across the economic system. And as the 21st century began, a storm was building. The road to the financial crisis homeownership had long been held as a core part of the American identity. A house symbolized stability, belonging, success. Banks and mortgage lenders recognized the emotional power of this dream, and they began to sell it aggressively. Loans were offered to households that, in previous decades, would have been considered too risky. Complex financial products, known as mortgage-backed securities, allowed banks to resell and redistribute risk across global markets. The logic was simple. If the risk is spread out, no single institution can collapse. But the logic was flawed. Bank of America, like many major financial institutions, became deeply involved in the mortgage and securities market. It acquired Countrywide Financial in 2008, one of the largest mortgage lenders in the country. Countrywide had grown quickly by issuing subprime loans, mortgages given to borrowers with unstable incomes or weak credit history. These loans were designed to fail, but by the time the scale of the crisis became clear, it was already too late. In 2007 and 2008, the housing market cracked. Then it collapsed. What followed was the most severe financial crisis since the Great Depression. The system falters foreclosures spread across American neighborhoods. Jobs disappeared. Retirement accounts shrank. Confidence evaporated. Financial institutions around the world began to fall. The global economy wavered. Bank of America, heavily exposed to mortgage risk through Countrywide and other investments, faced massive losses. Yet, unlike many smaller banks, it was too large to fail without destabilizing the broader economic system. The US government intervened, offering support to stop the collapse from spiraling further, and with this intervention came a realization. This was no longer just a bank. It was a pillar of the financial world. Its survival was tied to the survival of the US economy itself. But survival came at a cost to the bank's identity, its reputation, and the lives of millions who bore the consequences of the crisis. This was the moment when the meaning of financial power became unmistakably clear. Power can build, power can sustain, and power can break. And in the aftermath of crisis, a new era was emerging, one defined by scrutiny, restructuring, and the rise of digital money. This is where the story moves into its most complex chapter. Part 3. Power in the Modern Age. The financial crisis of 2008 was not only an economic event, it was a shift in perception, a moment when millions of people began to question the structure of modern finance itself. In the aftermath, Bank of America found itself in the global spotlight, examined, criticized, defended, reevaluated. The institution survived, restructured, and continued operating. But the crisis had changed the conversation. The bank was no longer simply a symbol of American prosperity. To many, it had become a symbol of something deeper, something more complicated, the power to influence the lives of millions, with decisions made far from public view. This final chapter explores that power today, how it functions, how it shapes societies, and what it means for the future. The age of regulation and repair. After the financial collapse, governments around the world moved to tighten the rules of banking. New regulations were created to prevent the excessive risk-taking that had led to the crisis. Banks were required to hold more capital, improve transparency, and limit the leverage of certain investments. Bank of America paid tens of billions of dollars in fines, settlements, and legal costs related to mortgage practices and securities sold before the crisis. Entire divisions were reorganized, risk models were rebuilt. The message was clear. A bank of this size is not merely a business, it is infrastructure. Its failure would not affect only shareholders or executives. It would affect the global economy. And so the institution adapted, reshaping itself into a more cautious, measured form of financial power. But the world did not stand still. While the old financial systems repaired themselves, new systems were beginning to rise. Digital money and the changing landscape of finance. For centuries, banking revolved around physical currency, paper records, and in-person transactions. But in the 21st century, money increasingly became information, data, algorithms, electronic movement across invisible networks, online banking replaced branch visits, mobile apps replaced checkbooks, credit and debit cards replaced cash. For Bank of America, this transition was not simply technological, it was strategic. A bank is not defined by the currency it holds, but by the trust it manages. And in the digital age, trust depends on security, speed, and access. Billions of transactions move through invisible pathways every day. Data centers hum with the electrical heartbeat of modern commerce. Financial networks stretch across clouds and servers, linking continents in milliseconds. The institution that once operated from a card table on a San Francisco wharf now manages operations in more than 35 countries, serving tens of millions of customers, from households to corporations to governments. It advises companies on mergers worth billions. It manages investments that influence entire sectors. It administers the flow of capital through global markets. This is the new face of financial power, not gold, not vaults, not marble columns or cash counters, but systems. Systems that most people never see, yet rely on every day. Power in plain sight, Bank of America is woven into the everyday rhythms of modern life. It processes paychecks, finances mortgages, handles retirement funds, facilitates trade, issues credit, moves capital across the global economy. Its influence is not loud or theatrical. It is subtle, systemic, structural. A decision made in one boardroom, a change in policy, a shift in interest rates, can affect millions of households, thousands of businesses, and entire regional economies. And because of this, the institution exists in a delicate balance. Too much influence, and it raises questions of corporate control. Too little, and the system it supports begins to weaken. Bank of America is not the only institution that holds this type of power, but it is one of the most visible, a symbol of the financial architecture that underlies modern society. And like all architecture, it remains unseen until it cracks. The future of influence. The future of banking is being shaped by forces that are still emerging. Cryptocurrencies and decentralized finance challenge the traditional systems of currency and governance. Artificial intelligence algorithms are increasingly involved in investment decisions, credit analysis, and fraud detection. Global supply chains shift and adapt to political, environmental, and technological pressures. In this new era, Bank of America faces a familiar choice, the same choice that defined its origins. To remain an institution of power, it must evolve. The world is changing, the tools of finance are changing, the expectations of governments and the public are changing. But the core question remains, who controls money, and how does that control shape the world around us? In 1906, a young banker rescued rolls of currency from a burning city and placed them on a wooden table to help people rebuild their lives. Today, that same institution moves trillions of dollars across digital networks that circle the planet. The scale is different, the technology is different, the complexity is greater. But the underlying truth remains: money is more than numbers. It is trust, it is belief, it is power. And the institutions that manage that power are more than corporations. They are the engines through which modern civilization moves. To understand Bank of America is to understand the world we live in, a world shaped not only by military power, government authority, or cultural influence, but by the quiet, constant flow of capital that sustains everything. This is the story of money. This is the story of power. This is the story of the financial world that shapes our lives, often without us ever seeing it.